Here to talk about all this, we go to the trading floor and visit with Scott Gecas of Walsh Trading. And interesting market trade where we have the corn market going one way, the soybeans going the other. The wheat kind of a split decision there, kind of caught in the middle. So what's the analysis there on the floor today?
Yeah, I mean, with the grain market in particular, you've seen a lot of short covering yesterday. That's why we have one of the biggest spikes. We had that first delivery notice starting Monday, so it's more or less positioning trading with the funds. You got to remember that the funds have been record shorts from soybeans to corn as well as wheat, just across the board. So we've seen a lot of that short covering come into play yesterday. Not really so much today, but that is expected as some of the futures roll off, rolling into a new futures month.
So you're one of the option gurus that we speak with all the time, and they have the May contracts going off the board today. Just wanted to take a look at that from your perspective. What does that mean in the mechanics of this?
Well, typically when you have a May expiration or just any expiration, what we focus on is the open interest. Wherever the largest open interest on that particular strike is usually where the market gravitates to what that is expiring, and that's called a market pin. So usually at that point, if you see a large open interest in that options, the futures tend to gravitate towards that open interest and pin on that particular line. Now, because I do focus on options quite a bit. Earlier in the week, I was talking about the corn options on 365 line. They had an open interest of around 15 to 1600. We've seen that explosive volume come in. It was over 10,000 contracts. The open interest right now is over 10,000, so that means there was new buying. Does make sense with the funds being at record shorts in corn, so that could be being able to protect those short positions. And now that position in that 365 line continues to build. You know, there's already over 3,000 open contracts that were traded on the 365 line. That's what we've been focusing on lately.
All right. Thanks for explaining that. Good information. Scott, we're going to pause right here, and then we'll come back and we'll take a look at the volatility in the livestock trade when we come back. Well, Scott Gecas is talking with us. He is with Walsh Trading in Chicago. He's right there at the edge of the trading floor, which is very convenient because the trading is taking place right behind him there. Scott, on the livestock trade, boy, this has been a week to remember here. We've had just huge swings in the livestock trade, and even within today's trade, when you look at it from just an intraday perspective here on the feeder cattle and on the lean hogs, we've had some really big swings. Let's go ahead and dissect this. We'll start with the live cattle board and get everybody updated on prices, and then we'll walk through these. June live cattle have been higher and lower. Right now we're at 115.05 on the June. That would be down 33 cents. And if you go beyond that, August through December, they're in the teens to the downside. If you look at the feeder cattle market right now, you have the August contract 32 higher at 153.57, but that's still a far cry from where it hit its peak today. That was at 154.97, so about $1.40 off of that. September now 33 higher at 154.65, but they are higher, and they are higher across the board on the feeders where they have been completely washing out for the last 2 days. Now, if you look at the lean hog market, here we closed limit down yesterday. Well, today we have been lower, then they surged ahead and went higher, and now we are lower again. June lean hogs down 23 at 89.55. July down $1 at 93.65. So I just wondered what the scuttlebutt is among the traders behind you there on the trading floor. What are they talking about when it comes to the livestock trade?
Yeah, the livestock trade, it's pretty much a lot of headline risk. With the cattle market in particular, you've seen a big, strong sell-off. You still have to remember that the funds are still a record net long, so that had to do a lot with a little bit of short covering. There's rumors that the calves coming out of the winter are not being sustainable as going into the summer months. A lot of the calves have been dying. That's one of the reasons for the pullback. But on the other hand, seasonal demand is stronger than expected. The cash cattle trade ranges anywhere between 125 to 128. Last week we were seeing in the 130s. So, that's definitely adding a little bit pressure to the cattle market in particular. The option volume is on both sides. The skew is pretty much flat, meaning that there is no quite clear direction on which way to go. The funds are still holding record net longs, but you're seeing both sides of the options trade. An example of that would be There was a significant size trade that went up in cattle this morning. The 110-100 put spread traded about 1,000 times. That's notable. That's something that we do keep an eye on. But as far as moving forward, it's still got a more of a bullish trend to the upside, even though with this stronger pullback. We're going to wait and see how this is actually going to play out with both sides of the market in the next few days. Now, on the other hand, with the hog market, it's complete headline risk. So China demand continues to increase, even though that they still have to pay that extra premium because of the tariffs. Now, even with the cancellations that came out this morning, with China canceling some of the U.S. pork, they still committed to 26% of all the U.S. pork that is being produced. So in the short term, it is a little bit bearish, but in the longer term, we're still expecting that trend to continue to the upside.
Thanks for pointing that out, and excellent information as always. Thank you very much. Scott Gecas with Walsh Trading in Chicago, and that's the very latest developments. By the way, the U.S. dollar index, I checked, and it's down a little bit, a couple hundred points.